Now, the last question that I had in that subject is, this is what the client told me. The client told me that one of the strategies other investors are using is that they are selling properties and 1031 exchanging them now into opportunity zones. And then if you exchange them into an opportunity zone, that the opportunity zone allows you not to pay capital gains or something like that. So he didn't go into full detail. He just kind of pitched it to me, but like I almost felt like when he told me that, like a light bulb just went on, like
Yeah.
ding, 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 and I was like, wow, like this is brilliant. Would you mind elaborating a little bit on that, and if that's factual or not factual, and how people are implementing that?
Yeah, yeah, absolutely. So I tell you, opportunity zones, they came about with the Tax Cut and Jobs Act, Donald Trump's tax plan from 2017 that went into effect in 2018. And that was one of the lesser known or lesser publicized things. But now it's receiving so much more publicity, and the time frame around it is important too. So here's the framework. I can sell an asset, anything. It could be property, or it could be a business, or it could be stock. It could be a comic book that I sold. The point is, I got a capital gain, and I don't want to pay taxes on that capital gain. I can roll that into what's called a qualified opportunity fund. And when I do that, it allows me to defer the tax that I would have paid. So instead of paying taxes today, I can kick that tax can down the line for so many years. And once I get to the point, and it's 5 and 7 years were the original markers, but because of where we are in terms of the timeline, it could be a little less than that. But the original plan was, if I defer for 5 years, I get a 10% step up in my basis. So instead of paying taxes on that amount, when 5 year hits, I can pay taxes on 90% of it instead of the full 100%. That's a win, because not only did I hold on to that money and it didn't go to the IRS, it was reinvested and earning for me. When I do pay taxes, I only pay taxes on 90% of it. If I hold it for an additional 2 years and I make it to 7, well, then I only pay taxes on 85% of it. So I can get a 15% kicker at that point. At that point, though, taxes due, right? IRS is saying, hey, look, you owed us a couple years ago. We let you slide. We want our money now. So you got to pay taxes eventually on what you sold, okay? But the new thing that you bought inside of that opportunity fund, if you hold that new purchase for at least a decade, 10 years, and you decide to sell it, no capital gains tax, no depreciation recapture, you can walk away completely tax-free. And it ain't a lot of things that the IRS give you that are tax-free. They do a lot of tax deferral, but tax-free, this is one of the limited things that you can do that with.
So basically, and is there a way on the property that you sold, is there a way to get more than 15% step up in basis almost? Or not 15%. So it's instead of paying 100% of that gain, you're only paying 85%. Is the 85 the lowest number, or does it go lower than that?
No, that's the lowest, the way things are written right now. And again, based on the timeline, we may not even be able to hit the 7 year mark because I think that expires in 2026, which only kind of gives us 5-6 years ish based on where we are today. So for those that did this a year or so ago, then they have that opportunity. For everyone else, you kind of stuck at that 10% mark.
10%. So eventually, if you knew that you were going to be liquidating your real estate portfolio, and you knew that you weren't going to 1031 exchange, or you thought that the 1031 exchange was going to go away, it might be a good opportunity for you to look into a qualified opportunity fund.
Yep.
And then you would be saving on the property that you're selling. Those taxes are going to be due, but then you would also be setting yourself up where if you invest in a property and you buy it at $1 million, over the next 10 years, it appreciates to $2 million. Now that entire $1 million is tax-free completely.
Tax-free completely.
Instead of holding on to the property that you currently own and for the next 10 years and then selling, you're going to be subject to capital gains on the entire gain if that property goes up as well too. You know what's funny? There was an apartment complex that investors bought in our area for like $70 million. And I looked at it, they remodeled it perfectly. And I thought to myself, wow, that was a lot of money for this apartment complex. And then when this client told me about the opportunity zone, I looked into it. It fits right into that opportunity zone. Now I'm pretty certain that their thoughts were exactly what you're describing right now. That they're thinking about it maybe as a liquidation of their portfolio, maybe in 10 years or so. And that would, in other words, help them.
Yeah, and here's the other thing that for folks to keep in mind too. It's I don't want to downplay it, but it's not necessarily a tough thing to start your own qualified opportunity fund. You have to self-certify, and there are some really heavy compliance rules that you have to follow. But if you talk to your tax professional or someone who specializes in setting up opportunity funds, I think many of the listeners would be surprised how easy it is to do so. So if you're going to do development work or buy and hold real estate and all those other things, especially if you're going to court investors, does it make sense? Because these investors are selling things all the time. They need a place to park their money to offset gains. Does it make sense to have a qualified opportunity fund that invests in opportunity zones, just like that project you mentioned? That could be a win.
Yeah, it could be helpful for all of the parties. Good.